Welcome to the F+L podcast. My name is Vicky Denton, and I'm your host. Our guest today is Jason Wells. Jason is the president of Novvi Inc. Um, Novvi is a very unique company in the base oil space. It's one of the few companies that provide renewable base oils. I'd like to introduce Jason, and maybe he can tell us first about himself and Novvi to our audience. Welcome to F+L podcast, Jason.
Hi, Vicky. Thanks for having me. I'm Jason Wells. I'm the co-founder, currently president of Novvi. For a long time, I was the technical founder and chief technology officer for Novvi. Happy to be here.
Thank you, Jason. So you and I were talking a few months ago. We met at ILMA in October, and you were telling me you're actually from Minnesota, but Novvi is actually based in California. And today we're doing the interview. I believe you're in Houston, correct?
That's correct.
Okay, so tell us, why are you in Houston? And when did you take over as president of Novvi, and what happened?
Okay. Yeah, I'm in Houston. We have our manufacturing is all in operations, and finance headquarters is down here. We have a 25 kiloton base oil plant, which is based in Deer Park, just outside of Houston. I'm here visiting. We also, one of our shareholders, H&R North America, is based here in Houston, so I'm visiting them today. Yeah, go ahead.
Yeah. So this plant, Jason, when was this built? When did it start up? Tell us a little bit more about the transition of Novvi being a manufacturing company, because you've existed for a long time. You've been in the market.
That's right. We really started production. Actually, we started here commercially in around 2013. That was the facility we're in today. It started out as a chemical toll manufacturer, Texas Molecular. We took over that plant and facility, and then we substantially added to it. We added our front end, back end, some large capital projects. So today we own the plant and facility. It sits on a land lease, but the plant is Novvi's. We continue to upgrade and improve that plant.
You have a unique technology. As you mentioned, your background is technical. What's unique about Novvi?
I think one of the unique things about us is, we are producing renewable synthetic base oils. So we're using bio-based plant sources for our feedstock. But I think the product is unique. It's a very high performance base oil. It's made from synthetic alpha olefins that are produced from a bio-based base oil. So today, I think we're the only company, I think, in the market with commercial synthetic PAO type base oil molecules that are from a renewable feedstock.
Okay, and one of your shareholders is actually a company called Amyris. You started as being part of Amyris. The technology that you employed, was that related somehow to Amyris, or was it a completely different concept from the Amyris technology?
No, it's really an evolution of our platform. So, we started in 2010. We developed a renewable synthetic platform for converting olefins into polyolefins. We started with farnesene. They had a synthetic biology technology. They had commercial production of beta farnesene. We could convert that beta farnesene into a monoolefin we used as a monomer to produce base oil. So the platform today is an evolution of that early technology, which was called NovaSpec. It's in many ways it's an improvement, an advancement, and sort of reflected the change in the market. And so today, our base oil technology, it leverages much of the same process technology that was developed in 2010 to 2013, with some additional unit operations and technology around the alpha olefin production. And it's a different optimization of the PAO type molecule.
How long did it take you to go from concept to proof of concept to finally production using a tall blender and then to market?
Well, I would say that the journey really started in 2008. So we had started working on technology around synthetic base oils, looking at synthetic esters. I think my background and our experience working with high performance synthetic lubricants, finished formulated lubricants, and base oil technology, such as conventional PAO, informed sort of the direction and the goal of creating a bio-based base oil that had a lot of the same characteristics. So, I think it was an evolution, getting to what is the target molecule, what would meet an unmet need in the market for performance, as well as being sustainable and renewable. And that was really the objective and goal from the beginning. I would say it was really 2011 when we sort of had this hybrid molecule, it's a PAO type molecule, which was produced from the beta farnesene, the synthetic biology platform. And then it was more 2013, 2014 when we started to develop renewable alpha olefins, because we saw the need and the limitation of the biosynthetic process. So the synthetic biology using genetically engineered microorganisms, I think it had a lot of promise. It still has a lot of promise in terms of it's a great toolbox. It enables you to make on purpose unique molecules, including olefins. But the technology and scalability it didn't enable us to do conventional synthetic lubricant base oils. So the drive towards renewable alpha olefins was an evolution of the platform to enable us to create a scalable base oil platform that could compete on cost and could deliver higher performance.
How long did it take? How long did it take you there?
Yeah, so that took probably it was probably 2016, 2017. So I guess you could measure that. You could say it took us 7 years to really get to that point. But it was a long journey. It was an evolutionary process.
So you have to be very patient when you're in this business.
Well, yes and no. I think it is a lot of fun along the way. So we moved quickly, and I think we had a lot of experience in the market. We launched products. We learned. We sort of did an iterative approach, I would say. So it took a long time, but it wasn't like we went and hid away in a lab somewhere for 7 years until we came out with the right product. It was sort of a continual exploration of the market, adaptation of process, and feeding back into creating better products.
And the real crux of the matter is when you're doing product development, you need capital. So
you need capital, yeah.
And is there a lot of capital available in this space? Because for AI, obviously that's a bandwagon that everyone's trying to get on. Another area I think it's completely unrelated to lubricants is crypto. That's another area where there's a lot of money. But for the space that we call renewables and then base oil, that gets smaller, right? How much capital is available, Jason, and how challenging was it for you to raise you and Jeff, actually the predecessor and co-founder of Novvi? How tough was that for you guys?
I would say this: the capital is available sort of in cycles, right? So there's always sort of a cycle of hype, which if you're creating technology or products or services that are in the right time of this hype cycle, it's easier to raise capital. I will say, we had some bad timing. We started 2008, right when the biofuel industry was sort of falling apart. It was very difficult to raise capital. At various points, it's been easier or more difficult. But overall, I would say, if you have products that meet a need in the market, they're delivering value to customers, and you can produce them at a competitive cost, there's always capital available. So I think if you've got commercial validation of your technology and you've got a good product, there's capital available to scale it. I think what I see is there's a lot of business models where the scalability is in question, or the unit economics are not there yet, or they have to be proven, and so it's always more difficult and more challenging if you can't demonstrate product market fit, and you can't show the unit economics delivering on price versus performance. In our case, it's been getting easier, I would say. As we've gone along, we've got better and better products. We've got better unit economics. That said, it's still a challenge, right? Base oil production, chemical manufacturing, it's capital intensive, and building plants is expensive. And so I would say it really fluctuates, it's cyclical. Right now, it maybe isn't the best time. Interest rates are high, so funding or financing large capital projects is not so easy. Early stage ventures have a hard time raising money right now. Mature companies that have revenue and are profitable, I think there's capital available.
So the decision to go from toll manufacturing, which is an asset-light business model, to actually building your own plant, you had to raise a lot of capital. You had to bring in new shareholders. So two of your largest shareholders now are Chevron, which is, of course, one of the largest energy companies in the world, deep pockets. The other shareholder you have is H&R. So tell us when they got on board and what was the strategic fit for Novvi with these two companies?
Yeah. So Chevron was first. I would say that we worked with them for quite a while to help, for them to understand our technology, for us to kind of work on the right product. I think ultimately they had a need in their product portfolio. They saw a fit for the technology, and the timing was right in terms of there was a need or a desire to have renewable, sustainable products in their portfolio. And so that worked out really well. The timing was good, where we had the ability to create the product, the Sonova base oil product line that was a fit for Chevron's business at the time. And they had the capital. And so we were able to get our initial commercial production facility online through basically adding to and expanding the tolling facility where we started production in 2013. So we added hydrogenation, some additional unit operations, end-to-end process. So we got that completed. H&R came later. They were, I would say, complementary to Chevron, but many of the same kind of drivers. A need for renewable, sustainable products, higher performance products that would be a fit for their markets, which is more process oils, polymers, elastomers, and those kinds of materials. So there was a kind of complementary fit between Chevron and H&R. And I would say that continues today.
So Jason, right now you're in the midst of restructuring. You filed for bankruptcy proceedings a couple of weeks ago. I guess that would be November is when you filed for bankruptcy. Tell us what's going on there. What I think it's a 120-day process that you filed. Give us a little bit of background.
Yeah, we filed first week of December. I would say though that the actual Chapter 11 petition was perhaps the final stage of our restructuring. The restructuring really started in August, where we started to develop a plan, work with our shareholders on the business strategy, and then navigate and negotiate a restructuring support agreement and a new shareholder operating agreement. So that was all in place by November. So when we actually filed the petition in December, the structure of the eventual reorganized Novvi was already in place, and we had already received preliminary financing. So, and the rationale here, primarily what this is accomplishing, it's allowing us to bring in new capital, but it's also converting Chevron and H&R debt into equity. And so part of this court supervised process is sort of streamlining the shareholder structure. That's part of the intent.
So
And
is filing for Chapter 11 the only way to do restructuring? I mean, isn't that
no,
a little bit drastic?
yeah, you could argue that it's maybe the hard way, but ultimately there was a lot of considerations. I think this was ultimately the plan and the route that the shareholders chose to go. And we're not done with it yet. You know, it's a pretty unusual Chapter 11. One of the things that's going to be unusual about it is hopefully it's going to be very fast. Since we are electing to primarily we're restructuring shareholder debt and the equity structure, not external unsecured creditors. We're getting pretty good flexibility and autonomy from the court. So they've approved all of our motions, they've approved our debt budget, and essentially we plan to try to complete the Chapter 11 by the end of January. So we're hoping this is more of a 60-day process.
So I'm going to ask you kind of a sensitive question, but I think it has to be
Sure.
asked. What was the reason for the leadership change at Novvi? For the longest time, Jeff Brown was the face of Novvi, and you were more like in the background. Why did you have
Yeah.
to step in?
Well, shareholders wanted to change. I think they, we had been in business for quite a while, right? So we had a business model around producing lubricant base oils, and the strategy really of achieving vertical integration and economy of scale. That was very much Jeff's vision and thesis. I think it still is in a way. I think our eventual goal is to achieve, much larger scale, much larger impact to benefit from improved, economy of scale and vertical integration with our feedstock production. I think the issue was the strategy, and the amount of capital required to execute on that business. I think the current strategy is more to focus on Novvi becoming profitable, demonstrating commercial success in its current footprint, sort of earning the right to achieve that scale and raise the capital to do the expansion. And my guess is this is going to play out slightly differently than the previous plan, in that we probably won't build a world scale multi-100,000-ton Sonova plant next. That won't be the next thing we build. The next thing will probably be a modular plant that allows us to integrate around our feedstock. And it's going to be more responsive and driven by our customers and the market. So if I had to, in a nutshell, I would say the strategy was go big or go home. And it was very much a big capital project. Now the strategy is really listening to our customers, focusing on where we create the most value, and really taking a more holistic approach to sustainability. So looking at not just carbon footprint of our feedstock and raw materials, looking at application performance, looking at ways that we can create sustainability through energy efficiency, equipment durability, value propositions that really allow us to become profitable in the next 18 to 24 months.
Jason, what's your feedstock?
So today we use a variety of feedstocks. So one of the things we're looking at is not just diversifying the feedstock. So I'll be blunt. We use some palm-based fatty acids in our base oils, but we also use non-palm based materials. So coconut and other C16 sources. This is a sensitive issue. So one of our challenges is certain markets, certain segments have a sensitivity around palm-based products, and we're addressing that a couple different ways. One is through diversification, obtaining, scalable non-palm raw materials, but also working on palm sustainability. I think the considerations for specialty chemicals and lubricant base oils are different than those for fuels. And so we're taking an approach that we can help improve the sustainability of palm. We're using it in products that deliver really high performance, deliver carbon benefits through their application, and ultimately, many of these products that Novvi makes, they have very long service lives. So they're ultimately, they're not burned, they're not a biofuel, and I think if you look at the overall carbon footprint and ecological impact of what we're doing, we're having a benefit. We're having a benefit not just through the carbon footprint of our raw materials, but also through the application and through what we're doing in our supply chain to help our suppliers and channel partners, essentially promote sustainability. So one of the things we're doing, go ahead.
Mm-hmm.
Yeah.
No, I was going to say that obviously product carbon footprint is one of the most important aspects in this area we call renewables. So, and
Well,
it's a full life cycle, right?
well, we often talk about it in terms of cradle to gate. I think oftentimes it's very difficult to quantify the impact in for a lubricant, say, the in-use performance impact. Like this can be difficult. So we focus a lot on raw materials and feedstocks, which is important, and we do that. So we spend a large amount of our effort on ensuring, that we're not incurring environmental impacts like land use change, things that would have a negative effect on our carbon footprint. But increasingly, what we see is that OEMs, people who are using our base oils in finished lubricant products, they're focused on application performance. And if you look at the carbon footprint of a Class 8 commercial vehicle, for example, it's a huge footprint. There's a lot of carbon, a lot of energy intensity, manufacturing operations, a lot of raw materials go into making a truck, and it's not that much oil. A couple kilograms of oil, and the carbon footprint impact of a bio-based renewable carbon negative oil versus a petroleum or natural gas derived oil, it's a couple kilograms per kilogram of oil. If you look at the impact of improving, say, the drivetrain efficiency by a fraction of a percent over the life of the drivetrain or over the life of the fluid, it's orders of magnitude larger in impact. So, this is where we're looking increasingly at low traction fluids, higher performance, higher efficiency lubricants, and ways that they can improve the efficiency of equipment. And that is, automotive, commercial vehicles, turbine oils, compressor fluids, hydraulic fluids. In all these areas, we can have a much larger impact on the carbon life cycle of the equipment through the application performance. And I think the challenge is, how do you quantify that? How do you get that data? How do you trust that you're making a fair comparison? And these are the challenges, but ultimately, that's the larger impact.
Yeah, and actually that's what everyone is focused on right now, is trying to determine an accurate figure for product carbon footprint. A lot of we just had that conversation, in fact, a few days ago with U.S.A and Mattel and Aaliyah. So this is happening, especially in Europe, really important. May not be so important right now in Asia, but everyone is global. It's a global business. Palm oil comes from Malaysia, Indonesia, Thailand, so mostly Asia. Rapeseed, I guess, is mostly Europe and North America. So when you choose a certain feedstock, how does that impact on the quality of your product, its performance? Of course, that you mentioned is so important to OEMs. Are you feedstock? How would you say it?
Agnostic, I would say.
Yeah. Are you?
We are, and and the reason is because we don't make our product out of vegetable oil or fatty acids, right? We make, it's a synthetic base oil, so we're making an alpha olefin, which is a precise arrangement of carbon atoms. So there's no, it would be analogous to if you buy an alpha olefin from ethylene, it doesn't matter if that ethylene came from coal or from a cat cracker at an oil refinery, because ultimately the ethylene is very high purity. We make a very high purity basically feedstock that we produce our alpha olefins from. So in terms of the product, the quality, the consistency doesn't have really much to do with the plant source. The biggest impact there is how expensive is it and what steps do you have to take to get to the building block. And, essentially those are different processes. There's different chain lengths. Different plant sources have different fatty acid distributions, and we're after C16 or C12 and C14. So we need precise carbon number chain lengths. So obtaining those from different plant sources, it's not a problem. I think the costs are different depending on where you go. Sustainability is different. Carbon footprint, is different for different feedstocks and different regions where they're produced. So we pay attention to all of that. It's a consideration for where we source and where we produce.
So it looks like, Jason, that this side of the business you've figured it out. So the other things that seems to be right now evolving based on your Chapter 11 filing is you're actually shifting your market focus. Maybe not right away, but eventually you're going to move away from high volume automotive lubricants focus to more low volume but high margin markets. Tell us about that part of the vision that you put out there.
I wouldn't say it's moving away from. I would say it's a stepping stone towards, right. So we've had success in lubricants, and as evidenced by Chevron has commercial products in market. We have numerous customers now who've launched various automotive industrial lubricants using our base oils. So that's not going to change. I think we expect to continue to see growth in the lubricants applications. I would say we're less focused on really pushing fast growth in lubricants, by discounting the product and trying to rapidly grow the lubricants business to a multi-100,000-ton scale. In that way, we're focusing on where do we create value today, and that frankly, it's a mix of different applications. So it's not so much a shift as a broadening of the focus and letting the market dictate where we need to expand, instead of us trying to predict where the market's going to be, to deploy a huge amount of capital and then build this plant and then see, if that is the right thing. We're going to really be more responsive to the market.
How are you going to get to 100,000 tons?
So I talked about a modular plant. We see the market is changing, right? So, when we started, the focus was very much on engine oil. So Sonova 4 and Sonova 9, those were geared for engine oil and industrial lubricants. I think one of the things we're doing is we're also launching a lower viscosity product, right? So we see a need for lower vis base oils. I would say, so we're expanding the product portfolio and we're expanding the focus. And ultimately, I think we'll see faster growth than we would have if we had stayed exclusively looking at like the commodity lubricant base oils and engine oils and industrial with the current portfolio. So I think the growth is going to come from responding to the market with products and solutions that are, really a good fit.
Tell us a little bit more, Jason, about this modular concept, because are you talking about possibly bringing a modular concept to an existing oil refinery? Is that the concept, or increasing your capacity in Houston in a modular way? Instead of having a huge train or multiple trains, every module is for a very specific market segment?
So no, I would say, we're not integrating with an oil refinery. It's likely that our first expansion may be on the alpha olefin side. So one of our products is the renewable alpha olefins, and we're expanding those to include C12 and C14. And so we may see a need for expanded production facilities and vertical integration closer to the feedstock origin. So we're looking at options for doing that. In terms of the base oil production, there's a medium-term, long-term desire to have a second site. There's considerations for having a single plant is a concern for many large customers. They would like to see us have multiple plant sites that can produce all the products, so we have some redundant capacity. And then, we're looking at the growth rate, and I think we anticipate we're going to need more capacity in the next 2 to 3 years, and so we're exploring options to do that. And it doesn't have to be co-located with our base oil or with our feedstock production. So it may be that the feedstock expansion happens in Asia, and the downstream products may be elsewhere in North America.
Okay, so kind of a initial process, maybe in Asia somewhere. Of course, in Asia, the big palm oil producers are Indonesia and Malaysia.
Mm-hmm.
So maybe in one of those two countries, or even Thailand, because they do produce some, not as much, and then bringing a half finished product back to Houston for final processing.
I wouldn't say half finished. Like I said, the alpha olefins is its own platform. So we're seeing increasing demand for those as a product. So they're unique. They have some differentiated properties that deliver value in segments that traditionally use conventional alpha olefins from ethylene, and then some new applications because of the unique nature. So these are highly linear, so there's no branching. So there's phase change application is one of them. Intermediates and feedstocks for other products, let's say. So the alpha olefins, it's kind of its own platform, and so we may produce those in an advantageous location, close and integrated with the plant oil processing, basically an oleochem type facility. The downstream products, the considerations are logistics, deep water port access, and low cost hydrogen, and it's hard to beat the Gulf for that in North America.
That's true. So, yeah. Jason, what keeps you awake at night?
We have a lot of things going on. This is a time of change in both the market and in Novvi. There's a huge amount of opportunity for us, and I think the challenge for me is, we have to focus. I'm confident that we'll be successful, but there's a lot of decisions to make. There's a lot of things we can do, but we just don't have the time or resources to do. So it's difficult making those decisions. Foregoing opportunities, expansions, new products. I come from the technology side, so I'm always thinking about what's possible. What could we do? Very often, we have to execute on the current business model and strategy, and so there's a lot. There's a lot changing at one time.
How comfortable are you being the face of Novvi today?
I'll be honest. I'm not typically a public speaker. I'm not used to being the face of the company. I'm good with one-on-one. I'm good at communicating about the technology. I'm good at explaining what we're doing and why. I'm not a marketing guy. We have those. We have better spokespeople than me, but I think it's important, right? I think I do see the possibility. I see the potential, and so I think it's important for me to speak and communicate. I just got to improve at it.
Oh, I think you're doing great.
Okay.
Really.
Thanks. Thanks, Vicki.
Jason, I guess the final question I have is, what message do you want to send to our viewers? A few months ago, or maybe a year now, we decided to, initially we were mostly an audio podcast, and we decided to switch to video because that's really, I think, one of the most important mediums we have today. What message do you want to send out to the big wide world?
Yeah, well, I would encourage people to take a look at Novvi, obviously, to take a look at what we're doing, but to keep an open mind. about renewability and sustainability, I think it's very important that we start to shift the conversation to performance. So we start to focus on how can we measure real impact? How do these products and not just lubricants, but all of these specialty chemicals as well, how are they impacting the sustainability, ecology, carbon emissions? Ultimately, I would say this: we need to start to have a realistic look at sustainability in kind of a fundamental way, a holistic way. Fundamentally, from the lubricants perspective, equipment doesn't last long enough, and it's not efficient as it can be. And when we improve those things, if we can measure that, we're really having an effect on sustainability. And feedstock is a part of it, but I think we need to continue to evolve. I would say, in terms of Novvi, I encourage people to talk to us, reach out to us. We're very transparent. We're very open with people, and we like to help people understand what's possible in terms of their shift towards sustainable raw materials, sustainable products, and in many cases, we're here to just help educate the market. We're not here to sell base oil. We're here for kind of a bigger purpose, to have an impact. And so we want to help others do that in a way that's real and measurable and truly has an impact.
Jason, I'm sure your children are very proud about what you're doing.
Thank you. Hopefully they will be one day. Yeah.
Well, ask them to check out our YouTube channel.
Okay. All right.
Sounds great. Well, thank you so much, Jason, for your time. We really appreciate it. And good luck with restructuring.
Thank you. Likewise, it was great to speak with you.
Have a great day. Bye-bye.